Trading levels, what do we mean by that? Floor trader pivots. I'm going to show you floor trader pivots with a twist. It's something that I've developed that it just gives us a little edge with floor trader pivots. Floor trader pivots by themselves, they're not like the biggest weight that I would assign anything. And I'll try to, as we go through each chapter of this, I'll try to share with you how important each one is. Floor trader pivots are important, though, because we know a lot of people are watching them. I'm going to show you a floor trader's card, a guy I met in Chicago when I lived there, that he takes to work every day. He's got a little card with support resistance numbers on it, and they're based off floor trader pivots. And I'll show you what I mean as we go forward. Globex trading. If we're trading a market that has Globex sessions, we need to look at Globex levels. We have to, because professionals do. We need to look at yesterday's levels. I'll show you what that means. And I'm going to show you how to look at market profile in a way to come up with exact support resistance numbers that we're going to use in this trading levels exercise. How many people in here follow market profile right now? Nobody. You're going to like this. Floor trader pivots. So if you went to the floor, you go to Chicago Mercantile Exchange, you go to the Chicago Board of Trade, and if you took a tour and watched those floor traders trade, you'll see many of them with a card in their hand. And this card has important levels on it. And they're always watching this. So when price starts doing something, they're looking at the levels to see if we pass this level, where's the next likely level we're going to go to. And I'll show you that card in a little bit. This is widely used by off-floor traders. So when you talk about floor trader pivots, most of your available software for trading has floor trader pivots on it, if you want to use them. A lot of people use them. Is it a self-fulfilling prophecy? Maybe. But what we want to do is just understand where those levels are, because we know the floor traders are trading around those, and we know the off-the-floor traders are looking at them. So I want to look at them as well. They're important to me, but not in isolation, not by themselves. We're going to use that and just understand the area. So we have to be aware of those areas at all times. And I've got a new way to look at floor trader pivots. So FTP stands for floor trader pivots. We're going to use R3 to confirm R2. We're going to use S3 to confirm S2. So R3 is resistance 3, for those that may not understand floor trader pivots right now. S3 is support 3. And now we're also going to allow for greater volatility by going to 5 levels. So if you went to eSignal, for example, floor trader pivots, they go from R2, resistance 2, resistance 1, floor trader pivot, support 1, support 2, that's it. Over. There's no way, if you're looking at that, though, to understand if S2 is going to stop the market, has a higher likelihood, or if R2 is going to stop the market with a higher likelihood. It's just a number. I'm going to show you a way that you're going to have through Genesis, to start with anyway, that it's going to look at these numbers, and we're going to use S3 to confirm S2, R3 to confirm R2. Here's what I mean. So if we look at, I'll bring my little ruler over here. If you come over here and we look at R3 and R2, are those prices close together? No. So there's no extra weight to that. If you look at S3 and S2, are those numbers close together? They're almost exact. For that day of trading, S2 has a high likelihood at some point during that day acting as either support or resistance. Right? If we go down below this and then we come up to 1205, it has a high likelihood of acting as resistance. If we come above this and come down to this, it has a high likelihood of acting as support. A much higher likelihood than a normal S2 level. Much higher. Notice also on your weekly chart, S3 and S2, are those numbers close together? The answer is yes. And remember, this is from a weekly standpoint, so we're about 2.25 points away, but from a weekly standpoint, that's really close. Comparing it to the up here, 1311, 1301, there's 10 points difference in that. That's not close. So R2 is not going to have a big impact as likely as S2 is if we get down to that level. The other thing that we need to do is we need to understand where the different levels are and group them together. Do we have any levels up here from different time frame analysis that are in the same general zone? And we do. If you look at the weekly S3 and S2, 1192, 1194, and then look at S4 on the daily, we're at 1193. That area is going to be a very strong floor trader pivot area if we get to that level during the day. We don't ever know if we're going to get to this level every day. We just need to know where these levels are every day. Now look at the monthly. Is anything close on the monthly? Yeah, yeah. Because remember, this is a monthly number now. We're taking a look at a whole month of trading. And you're only 4 points different compared to, what, about 40? Almost 40 points different up on top. So the bigger time frame you go, the more leeway you've got to give that. And again, if we can get an area between 1183 and 1187, it will further make that area stronger. We don't have that here, and we didn't get down to that level anyway. But this is the method to actually get floor trader pivots and provide more power. If we've got a weekly and a daily lining up together, it's going to be a higher likelihood that that is going to be a point that we're going to have either support or resistance for the market. If we can get even better, like this example here with the weekly at 94.75 and 92.59, and then have a number from a different time frame come in the same general area, that's even more weight. That is going to be an area that the market should respect. But again, it's only one area, right? This is one approach. We're going to be cognizant of the fact where these are. At the beginning of every day, you've got to have a sheet of paper, and you've got to know where these are. Now, this information will come off Genesis. You'll see these levels with the price. You'll see that right now they don't show horizontal levels. I'm still working on that with Genesis. But tomorrow, well, I can't say tomorrow, when this plugin becomes available, the first part that's going to come available to you guys is going to be the floor trader pivots. They've done the work for it. They're accurate. They're right with the formula I provided them. But I don't like the visual display for it right now. So we're going to work on that. But you'll still be able to pull the number off. If I just release it as a library plugin to start with right now, this coming week, I've got to talk to Genesis, you'll still be able to get these numbers. I will not divulge the proprietary way to find these. I can tell you that R2 down to S2 is exactly like everybody else is doing it. Almost exact. There's nothing different about it. What's different with the way I do it is we're using S3 to confirm S2, R3 to confirm R2 if they're close to each other. That's what's different about it. And then we go out to R4 and R5, S4 and S5. It just allows for more volatility in the market. So if you get one of those big day moves, we've got an area that probably is going to still be around a floor trader pivot. The worst thing that happens if you watch floor trader pivots and the market goes right through them is now you're down to probably either weekly or monthly because it went all the way through your daily. That, generally speaking, isn't going to happen with these added levels. Something you're not really going to see that often. You'd have to have just a very big move to go outside of the range of this. Here's that card I was talking about. This came from a trader that is a floor trader. This is the E-mini S&P. And that's exactly what he goes to work with every day. You can see that he's got different weightings, just like we do. He's got 3 stars, 2 stars, 1 star. I'm still working on trying to figure all that out. I believe I've figured out the piece I've shared with you with the way that we're going to look at S3 versus S2, R3 versus R2. I think I had that part figured out. If it's not exactly what they have, it's close. And I'm still working on doing better. But right now, that's what a floor trader takes to work. They're looking at that all the time. They're looking at price action. Where's price action in relationship to these levels? And some of these people that offer this service, I don't know exactly I think it's $400 or $500 a month to get these numbers from an outfit that sells pivot numbers. Okay. So we're looking at multiple time frames and coordinating those. We're looking at monthly, weekly, and daily. We're looking to group them together in the same general price area. What you don't want to do is have something, if you had a daily and a weekly, and you say, hey, the weekly's, I'll just pull a number out of the hat, the weekly's 1,200 for S1, and then your daily's at like 1,203 for whatever it would be, call it S2 maybe. That's too far away. That doesn't work. 3 points in the E-mini is too far away when you're looking at that. What we want to do is find that general area maybe about 1.5 points away, somewhere in that general vicinity, that we know we're close. And that's all we're looking for, is knowing we're close. Different markets are going to be different ways. When you look at Forex, you're going to have a wider pip spread than like 5 pips, 6 pips. You're going to need more than that. You need to, as you go home with your market, experiment. Watch how the market reacts to these levels. If you're trading stocks, floor trader pivots, this is going to work the same way. And you're just going to have to look, are you trading an expensive stock like Google? Or are you trading a penny stock that might be 55 cents? There are going to be different levels for a 55-cent stock than for a $550 stock. So the only way you're going to be able to put your hands around this is to go home and apply it to your market. Get comfortable with it and use it. So when we have different time frames of floor trader pivots grouping close together, we have stronger areas. What we really want to do is find those R3 and R2s on our daily, weekly, and monthly, and those S3s and S2s on our daily, weekly, monthly. That's what we're looking for. And then we group them together from there. When those confirming areas come together on multiple time frames, it's very, very strong. Okay, floor trader pivots. I'm going to just stop right here. Are there any questions on floor trader pivots? It's pretty straightforward stuff. Okay, good. Globex trading. Not everything you trade may have a Globex session. If you don't have a Globex session, ignore this. You don't have one. For Forex, it's open 24 hours a day. But you've got a Globex session for the futures. You want to watch the futures contract for your currencies. Use that for your Globex, because you can't do it with Forex cash. So if you're a Forex trader, you've got currency futures that you're going to use your Globex levels for. Every day you've got to know where the high and the low was for that Globex session. So right there, the Globex session high price, Globex session low price. If you're not watching these areas and you start watching now, you're going to be amazed where we're going to come up to an area that's the Globex high from yesterday's session, and E-minis specifically, but it doesn't have to be just E-minis. It's a lot of different things that you can trade. Floor traders, not floor traders, professional traders watch that area. And that's just a little tip-off area to see what's going on. If you can't take out the Globex high during normal trading hours, you've got a fairly weak market. If your Globex low acts as support, you would expect, at least from that Globex low to start with, that you're going to, if it does bounce, you're going to have a little bit of a move. Usually you're not going to stall at these levels and not have any action and then just break through it. If it hits that Globex low, it should have a tradable move on it, assuming, again, we're putting our levels together. Right? We're not just going to take Globex low just by itself and say, oh, hit Globex low and it's going to take off. Is Globex low around a floor trader pivot number? If it is, it's stronger. Right? So we're going to be working with numbers throughout the day. The way that your brain works is going to be different than the way that my brain works or anybody else's brain works. So you're going to have your own organizational system that you're going to actually find a way to organize this stuff and say, okay, I have a level here, I have a level here. I do everything on paper. I really do. I don't, and when I say that, I should be, let me back up. I've got computer programs that do some of this for me, but I still have a backup on paper, right? And I'll share with you the programs I look at as we go through the presentation. I think there are some very, very good programs out there from a computer programming standpoint that do what I do throughout the day to make it easier for a trader. But computer programs are just tools. All a computer program is a tool. I don't want to have a program right now with these levels in particular that come out and say, okay, sell right now. What I want to do instead is understand where these levels are, and we're going to apply our own market experience to know if we're going to take that trade or not. Right? There's no substitution for that. There's just no way to substitute the subjective mind versus a systematic trade or a system trader. So we're going to look for confluence with our other methods at these levels for support and resistance. Again, Globex trading, these levels can act as either support or resistance. So if we drop below the low and then we're coming back up to the low, we want to look to see if that low is going to provide resistance now, because we went down below it, we're coming back up to it. That level is an area that could be a potential resistance area. It becomes much stronger if we have it aligned with other areas. Yesterday's levels. So what happened in yesterday's trading? Yesterday's high. It's important. We're going to have a double top. We're going to go up to the yesterday's high and then just turn down and form a double top and maybe a triple top as we try to go through it again, and we can't. So that's an important area to understand, as is yesterday's low, as is yesterday's close. Again, we're looking for confluence with our other areas. So now if we have yesterday's high and we've got a floor trader pivot around that area, and maybe the Globex went up to that level too overnight, couldn't exceed it, it becomes a stronger area. We don't want to use any of this in isolation just by itself and expect turning points here. What we want to expect is the confluence to come in and say, yes, this is a stronger area. Here is what we're looking at. Now, this is Dynamic Trader. Other software packages will do this as well. But I can just put yesterday's high, yesterday's close, and yesterday's low on that chart automatically. Just push a button and it comes on. And you look at it all day long. Now, did that have any effect on the market? It's just one day. But yeah, I mean, it was trying to come down here. It couldn't make it. We broke up, came back down. That acted as support, and we came back up again. So you can see that the market in its way sees it. The traders in that market see that level. And this is what I mean by not being exact, though. I mean, if you look at that and say, well, that you can't count that. You know, that didn't stop right on the line. We're not going to stop right on the line all the time. Sometimes we'll go just to the tick. The Gann stuff is amazing. I mean, the Gann stuff, when that number is there and it's vibrating, the market vibrates to that level, we're going to get to Gann in a second. But when it vibrates to that level, that price area, you'll see many times right to the tick. It just stops and it reverses. And I'll show you an example that's fairly recent in the S&P. Market profile. Before I go on with market profile, any questions on yesterday's levels, Globex levels? Okay, we got a gentleman coming up.
Yeah, just
I trade, is it on? I trade Forex primarily, and you mentioned using Globex levels. I'm not quite sure where to go to get that, but you know, short of going there, is there a better start of the day for calculating some of these levels? You know, midnight Chicago, midnight New York, London Open.
It's a good question. I'll give you a multiple answer. I think one of the things when I trade Forex that I like to do, Forex has 3 distinct trading times. You've got the Asian session, you've got the European session, you've got the American session. Some of those areas overlap, but what you may want to look at, just give you a little nugget to play with, is when you have the Asian session, use the Asian session hours and figure out your floor trader pivots and your levels for the European session. You do the same thing in your European session for the American session. You can treat them as 3 separate times if you want. With respect to how do you find the Globex levels, you need to have the CME exchange. You have to pay for the CME exchange to do that. So if you're trading Forex from your broker, you're not going to get those. You've got to get Chicago Mercantile Exchange's information, and you've got to have a platform to run it. So, you can do it through Trade Navigator. You can do it through any software package, really, as long as you have paid for the exchange fees to get the currencies from the Chicago Mercantile Exchange. There's a cost to doing it, but you're going to find the cost is very small compared to the amount of information that you get from it that you can trade with. Okay. Any other questions on the previous? Can you get the mic, please?
Thank you. On page 2, in the middle of your view graph, there was one last line that you put on the PowerPoint presentation, something about placing stops and exit that doesn't exist here.
Yes, I actually forgot that up front, that I changed that because
Okay.
I missed it. Yeah, because you can use that for that information. That information can be valuable for placing protective stops.
Placing protection, okay.
Yes. Yeah.
Do you ever look at average true range in any of these floor pivots?
Yeah, I do. Average true range is going to be something else you can come up with from a volatility measure. And I'm going to show you a better way, though, what I think is a better way anyway. Average true range is something to keep in mind, but I don't put it at the top of the list here. I don't put it in my 8. You certainly could. Do I look at it? Yes, on occasion I do. Because what you can do with average true range, to just give you an example, if we have an average true range of, let's say, 15 points in the E-mini, and all of a sudden we're up on a 25-point day, the market's doing something that it isn't an average occurring day. Something different is going on. Is it a news event? Is there something in the background that's causing that? When we go above average true range, just to put a little bit of volume analysis in it now, what's the volume looking like? Are we getting climaxes, either selling or buying climaxes? It's a tip-off. So when you go past the average true range in a day, look at the volume too to see what is going on inside that price. Do we have a climax happening? Does that answer the question? Okay. All right, we're going to turn to market profile now. Market profile is a different way to look at a chart. And I'm going to show you what a market profile chart looks like, but before we do that, we've got to go through some definitions so that you guys understand what we're talking about. TPOs. What is a TPO? Time price opportunity is all that stands for. And I'll show you what it looks like on a chart in a second, but each price traded in a 30-minute time period is considered an event. One trade or tons of trades during that 30-minute time frame is just one single event, the way we chart market profile. We give each event time frame a number. A letter. It gets a letter. And I'll show you what that looks like. Events are called time price opportunities, and they call them TPOs for short. And again, don't let any of this, if this stuff, you go, how do they come up with this? What does this mean? Don't worry about it, because I'm going to show you how to use the information. That's the most important thing. A market profile chart is formed by collecting the TPOs, labeling each 30-minute trading session with a different letter, and plotting the results on a vertical axis. Pretty straightforward stuff. A couple more definitions. Point of control. There is a peak TPO count during the day that the price traded at that level, that letter, more often than at any other letter for the day. And what that tells us is that's the consensus of value for that day. That level is a consensus of value. That's where everybody that traded that came to an agreement that this is exactly what the fair value of that instrument that you're trading is. Whether it's an E-mini or a stock or Forex, market profile works on everything. It works on every single thing you can trade. And there's a value area. Now this is where we start getting the volume involved with market profile. The value area is the price range that encompasses the central 70% of the trading volume that occurred that day. So we're taking kind of a standard deviation look, if you want to call it that, at the 70% of price levels that the majority of the volume traded in. This is important. This is really important because that's where all the activity was that day, and we had a high range and a low range. Those are going to be important points of reference tomorrow. Very important. Okay. Let's look at this right here. Get some definitions out of the way. This here is called the opening range. It's for this area. So this is one trading day. And we were down about 12.10.50 was about the low. And the high for the day was about 12.46.50. So we had a very wide ranging day. And this area right here, that TPO count, see how there's more letters here? Sometimes you can have the same. They'll be both looking the same. But the software, this is eSignal's market profile. So it's where I get my market profile from. There's a lot of different areas you can get market profile charts from. But this is the point of control. That's where, after that whole day of trading was done, everybody got finished, packed up, went home. This is what the consensus of value was for the day. And then this is the value area. That's the value area low. That's the value area high. We expect if price comes down here tomorrow, here, that's going to be an area of potential support. If price comes down here, again, be an area of potential support. You can see it never got down there. Another way to look at this is let's look at the day before, though, now that we got the definitions out of the way. Look at this level. The top of that value area actually formed the point of control the next day. That was an important level. You can see that the bottom of the value area was darn near the bottom of the entire trading day. I mean, it had 2 letters, 2 TPOs in that area. So that is how we use it. That's going to be important. You look here and come across, that's the bottom of the value area, come across here, and the way this works, I'll just break it down a little bit further. We're going to start with B. We're going to trade down to C, trade back up. C quits. We got D. D is going to come down, maybe back up, right? And then we're going to start either here or here, and then we start going up for the day. We go right up to here, E. And then we don't see any more E's up here, so we stopped at E, which was the low of yesterday. That was yesterday's low. This is how we start combining this stuff together now. So we've got yesterday's levels, we've got Globex levels, we've got market profile levels, we've got floor trader pivot levels. And we use all this information to our advantage. The reason we do that is because that's what professional traders are doing. If you don't have market profile, you're not going to be able to come up with these numbers. Is it the end of the world to you? No. I wouldn't trade without market profile numbers, though. They're important enough to me in the markets that I trade. And the theory should work in every market, right? And in reality, I can't tell you it works in every single stock. I don't trade stocks on a day trading basis. So I can't tell you that every day that in IBM, if you're a day trader in IBM, that these levels are going to be as important. They should be. But I can tell you in stock indexes and in Forex, these levels are important. They're important levels. And if you can, it's going to cost you a little bit of money. You need to know where they are. And there's different software providers that do this. Okay. Market profile continued. Again, we're looking at yesterday's value area high, yesterday's value area low, yesterday's point of control. On a very regular basis, those numbers are going to be stopping points in and of themselves, really. They're going to be stopping points for a move. I'm not going to tell you that the value area high is going to be the high of the day tomorrow. You can't say that. But that value area high, if the market goes up to there, these levels are seen by professional traders. There are a lot of professional traders that use market profile, that know where the value areas are, they know where the point of control is, and if they're using it, you need to know them, my opinion. If you don't buy market profile through whatever charting service you use, again, it's not the end of the world. But if you want the extra edge, this provides the extra edge. But again, we're going to look for confluence. Right? If this area, value area high, for example, or the point of control, or the value area low comes in with these other numbers we've talked about so far during this presentation, it's a stronger area. The more of these that group together at the same price level, you're starting to see that with different methods, we're arriving at the same price area. So we've got one faction of professional traders looking at this, another faction of professional traders looking at that. If they both have a confluence zone with that area, we've got more professional traders that are looking for that area to be respected. The more professional traders expect that to be respected, the more we're going to see the actual area bounce. That price will bounce.